The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour on the second day of March. Interesting. Nice shows today, right through. We've started at 8 o'clock. John Logan, then Larry Pesavento, then Tom and Tommy. Just terrific shows. Hopefully I can keep up that standard. And then we go right on. Today being Tuesday, we go right on. We got, let's see, so that's Think or Swim. That's the swimming lesson at noon. You've got Steve Rhodes at 1 o'clock. You got Dave White at 2 o'clock. Tom O'Brien comes on 3 to 5. 5 to 6, Andy Hecht. And you've got yourself a full house here at, wait, today's Wednesday. Sorry. Andy was yesterday, of course. This is Wednesday. Still pretty good house. All right, let's go to the numbers, and we're looking at the Dow up 5. Was down almost 100 points earlier on. Why did I tell my subscribers we're going to stay in our positions, our long positions? Because of a number of factors, and we'll go through them one by one. Let me show you the E-mini. Leg D, leg D in the Chapman wave. Isn't that where you're supposed to become a little bit cautious? After all, 1802 was the low on the 11th of February, and we're already trading in the 1970s. Actually, 1980, I believe. We hit, didn't we? We hit 1984.50, yes. So what we're looking at here is that the MACD, the moving average convergence divergence in the daily, is very strong. Stochastics at 88%, very strong. Look at the weekly chart. Look at the way it's used those hairpins at the bottom to be a springboard to move to the upside in a single leg A in the weekly chart. We'll analyze that a little later on. And look at the 120. I pointed this out that there was an up channel after those big arch formations. Then we made cup formations, went to a peak E. You can always expect a pullback from a peak E. We hit 1984.50, 120-minute chart. Stochastic at MACD said a little bit overbought, should pull back, went under the 9-period exponential moving average. Now it's nicely unchanged at 1978. Now, what does it imply? It implies that this line here now is a very important line. I'm going to make it a different color. Let's make it kind of a maroon color right there. That maroon, and let me make it a little thicker. Let me make it even thicker than that. Right there. That is now the resistance. That's probably a target point, 1978.50, just a little bit higher. And then I think we can take a bit of a rest. What I said to subscribers is that I've got a Chapman wave, I mentioned this yesterday, intraday, a Chapman wave signal that says that there should be a very sharp rally of between 9 and 11 points coming, and it could come from a low within the next 2 days. We might have used some of it up yesterday. Yesterday was a spectacular day. Now let me go back to the nitty-gritties. The support now is at the 1970, around about 1970 to 1966 level. If it takes out 1966 today, that'll be a negative, and say we've got another couple of days of consolidating. But this so far is exactly what we wanted to see. A best case example of a power move to the upside, a takeoff move, is a doji candle today or a slightly weak candle. A fantastic outcome would be if there's a push above above today's high, which is already at that 1984 level. Now let's look at the rest of the indices. We'll do them one at a time. INDU. Dow's up at 16,873. Leg D has continued today. It's made an extension to that leg from yesterday. What a fantastic move it was. Now, why was I so positive? Why were we long the Dow and then added to very long positions with a very with 3 times long position? Still a small position, but hey, believe me, these things move very quickly. It was almost 6% or more than 6% move in one day. However, the MACD is really strong. and the stochastics at 90%, the on-balance volume hasn't really started to kick in yet. That's something that says to me either we've got time to the upside, or it says, hey, you're getting to the point where you better be a little bit careful, all right? But in the meantime, we want to just stay in the long positions. Why? I wasn't sure I was capable of getting out, say at the close yesterday or first thing in the morning, and then getting back in at the low. I just didn't even want to be bothered. We're in the position. I'm hoping that it's a longer term position than just a couple of days. We'll see. Now, here's the other thing. Selectivity. We've rotated into different stocks. So we've got stocks that are doing really well. And one of the reasons is we're trying to do the under the radar thing, where these are stocks that people are not really talking about. And one's a dividend stock, one's in the high tech area, social media. Just trying to be as, as courageous as possible, but at the same time, functionally looking at it as if the technicals were giving very good signs. There was no reason why not to take the positions, and usually we place stops, and the stops so far have been very good because they haven't been hit yet. So that's our position. Now, here's something else, and we added something else today. In one of the commodities, we added a stock. I don't even know how it's doing. But let me just, before I even talk, maybe we're out of it. Oh, no, we're in it, and it's up about 2 or 3% from where we got in. Good. Okay. Now, here's another thing. The Dow has tremendous support at 16,762. Where was the low today? 16,766. So this is going to be very important. How does it hold the 9-period exponential moving average support in the 120-minute chart? Is it able to actually have an even greater follow through than one would expect, like more than a plus 30 in the Dow, plus 5 in the S&P? So far, nice action, but the day's young. Let's see what happens. Now, another thing, the reason why I was so positive is that my figuring here is that if the Dow is able to get to the 16,880s, which is actually done, and even if it can break a little bit above it, then all of a sudden that 17,048 level in the 200-period exponential moving average becomes a magnet rather than a repellent. Okay, S&P, SPX.X. S&P is up 1.40 at 1979. Continuing the leg D that started yesterday. I was discussing this yesterday when we had a call. We were talking about the SPY and why I thought it was positive. And there's an extension. There wasn't anything like this yesterday when we were speaking. Now you can get rid of that arc formation because we have to see how the cup formation follows through to the upside. Very positive action. You've got to get a little bit cautious here. Would I get in right now in leg D? You know, if you do, you can only get a smaller starter position and say, I really want to buy a decline towards the 1950s, 1962 to 19, maybe 53 level on a pullback. It's a little difficult to do it now. I am looking at potential higher prices. So yes, if you bought now a small position, I think you'll be looking good tomorrow. But not tomorrow, by the end of the week. Okay, let's go on. QQQ series, let me just do that. I want you to show something. This is a leg E, very close to the 200-period exponential moving average. I like it. It could have recycled. This could be E/A. Whoa, there goes the bell. So let's go quickly through these things. I want to do here we go. So we've got gold. Gold is up 5 at 12.35. It's acting very well. Dollar's also acting quite well. Silver's up 19 cents. You've got crude oil up 33 cents. Bonds are up a few ticks at 162.5. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Basil Chapman, Tiger Technicians Hour. So we're looking at, Adam wanted to know about the 2-year United States Treasury Note. This is a June contract. Made a peak E at 109, what was that? 109.25. Pulling back to 109.02 on just about on the 200 period exponential moving average. Now, what's interesting about this is that the weekly chart had a single leg up that went from the 108.10 low to 109.25. That's a pretty big move. Now, what I'm going to say is, let me just do this. So finally, I've got it. I believe I've got. Oh, great! I've been wanting this for ages. Thank you, Adam. So TU is my 2-year note, and not mine. It's the Treasury 2-year note, and I got it going all the way back. Oh man, that's good. I got it going all the way back to. Oh, well, it doesn't go all the way back. It only goes back to 2000 and June of 2001. That's okay. I'm going to do some work on this. Maybe I'll be able to do it during the break. All I can say is that monthly, that spike up and the pullback in March, the last 2 days, a day and a quarter, that has to be monitored. It has to be monitored very carefully. And the reason being, I'll show you right now why. The reason is that the single leg up, in the weekly chart, pulling back this far says you got to be careful. So I do want to do a notation. Maybe that isn't an A. Maybe that was a follow through. So let me do that. In fact, let me make a note right here in my book, my notebook, and I'll put dollar at TU 2-year, and I'll do that. But in the meantime, what I think we can look at is that the U.S., that is the 30-year note itself on the continuous contract, has had a fabulous move, and it's merely within the up channel, right in the middle of the up channel. It's holding beautifully at this particular point. So I don't want to get too carried away. That's 30-year. I know there's a very big difference between the trading patterns of the different yields. I'll get to that in the next break. Right now, I want to do a couple of things. I was asked about, here we go. So I wanted to look at the dollar. It's worth looking at the dollar because the dollar has extended its move up right now. I just want to double check. I've got it up 13 cents. It's up between 11 and 13 cents, 12 cents. It's at 98.49. The most important aspect to this is we've made a new recovery high. And the MACD is very strong and still rising. The histogram, look at that. The vertical lines are still expanding. And the stochastics are 93%, even though it's just turning down a little bit here. 93% is really good. The weekly chart is lagging a lot. So the stochastic hasn't caught up yet. It's got a nice beta, a nice difference between the 9-period differential green right there and the slow moving average, the red one. The MACD has not yet crossed positive, and yet look at the beautiful price movement. So all I can say is that it's the monthly chart that I'm keeping my eye on. The MACD has just crossed negative, but the month has barely begun. And my suspicion is that if the dollar goes from 98.50 anywhere towards 99.90 to 100.10, that MACD is going to deflect up, and the stochastic is going to go from 87% to about 89%, and that's going to be very positive. Could even be a little higher. But what's really important about this is that now we've got a Roman candle for February. And if we do trade at any point below 96.80 on any weekly close, that's going to suggest we're going all the way back down. But on the positive side, if there's even a sneak, just a touch above 99.63, like 99.64, 1 penny higher than last month's candle, then all of a sudden you've got a pattern that says, wow, you might be thinking that it's not a good sign to go from 100.39, take 8-9 months to go to 100.51, 12 cents higher, and then pull back sharply. But if there is a break above that 99.63 high of February, all of a sudden that 100.51 just becomes, it's like a magnet. Whoosh, we could be there within seconds. So I'm watching this really closely. That's the dollar. If you want to look at the EUR-USD, that's still pulling back in that inverted V-shaped pattern, the one I call the Eiffel Tower. You remember? Eiffel Tower, EIFFELTOWR. Interesting thing with the Eiffel Tower. We were sent the Eiffel Tower as a tribute by France, and we had it in pieces for years, didn't want to put it together. They finally did put it together, and look what happened. So Eiffel Tower, that's a single leg A up and down, like a capital A. Looks just like this, yeah. I always do that. And then I go like this, and I make it red, and I put in we used to call those picas, P-I-C-A, for those of us in the media business of printing. That's what we used to look at. There it is, the A pattern, straight up, straight down. So this is not good for the euro at this particular time, and it is positive for the dollar. And I just lost my earpiece. I've got it back again. There we go. So I wanted to do a couple of things here. I wanted to show you that the dollar strength so often has occurred coincidentally with strength in our markets, especially with the Dow, which is funny because you've got those multinationals. So it's a little weird. All I can say is patterns repeat until they don't repeat. And at this particular point, I think that there's a chance, here we go, back to the Dow, INDU, that the Dow rally, how it deals with that 17, if it can get there, the 17,000, between 17,000 and 48, that's the 200-period exponential moving average. The one that most fund managers, in my experience, look at is the simple one, the one that comes up when they pop in moving averages and they just grab it and they look at it. They don't do all that much thinking about whether it's exponential or simple or whatever kind of moving averages they want. This is the one that they look at, and that's at 17,190s. My thinking here is if by Tuesday to Wednesday of next week, if the Dow hasn't broken under 16,500, that's 350 points from here down, but instead it's moved into the 17,060s, there's a really, really, really good chance that not only have we stalled the reversal to go down and retest the recent lows in the Dow mid-15,000s, but we might be raising the base. And there could be something that could be called a Clinton rally or a Trump rally or whatever it is or a Trump failure and a Clinton failure. But I suspect that we're going to get some kind of relationship within the next 2-3 weeks to what's happening in the election and the expectation and non-expectation, whatever it is, that could impact the market. But the most important thing, look at the volatility index. The VIX is trading down. It was trading down. Now it's up 11 cents at 1781. But it's way below the 9-period moving average of 19.78. It is way below the 19.03 200-period exponential moving average and the 1887 200-period simple moving average at this particular point. It hasn't broken under the weekly low, the weekly 200-period moving average of 17.48. And that's what we're going to watch really closely. Look at the monthly. Monthly is even below the 9-EMA, but we can't talk about that 2 days into the month.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Dow's up 10, S&P's up 0.75. And I'm going to go to Anna in New York. Hi Anna, how are you?
Good, how are you, Basil?
I'm very well. Is this the first time you've called my show?
No, I have called before.
You have? Okay, good.
So I wanted you to look at stock X.
Okay. So this is United States Steel
Yes.
Corporation. X is the symbol I'm going to cry. It's trading at 10.38, up 1.19. I've been talking about it in my newsletter every day. And there it is, screaming away. We never got back in. So, do you have it?
Yes, I have it.
Wonderful. Good. So, to what price? Can I ask you what price you got in at?
Well, I have like multiple position because I started at 15 and then it went down. Then I averaged it, so my average is like around 1150.
Okay, so now actually I'm really pleased I asked you the question, because I don't know if you've heard my show before, but whenever someone calls in and they tell me about a stock, and it looks like it's had a fabulous move, and in the back of my mind, I'm thinking, wow, if they got in anywhere at a particular point, at this level, they're in fantastically. That's a very different, I don't have to tell you, it's a very different psychological situation to when you're in higher up. The stock doesn't do what you expected. In fact, not only does it go down, but you keep saying you think you're going to put a stop in, and then what it does, it goes from 15 to 13, you say, okay, it's not bad, it's going to get back, and then suddenly it's at 11, and now you're saying, oh man, I'm not going to, I can't sell now, and the next thing it's at 9, and then it goes down to 8, and then it goes like U.S. Steel did, down to $6.80.
Yes.
And sorry, 6.15 was the low, 6.15. So now what happens is, however great the stock looks, all that's happening to you is you are seeing your loss shrink, but you're still at a loss. So there's a different psychological thing. So now let me just tell you my rule of thumb. My rule of thumb, I've tried my best to do this myself as much as I can. I try, in fact, to avoid it completely if I can, unless I've got a stock. Like we have one stock with in my portfolio, which is just a tiny little position, and it's in a gun, the bullet manufacturer, because they are soft. They're bullets that have a flat surface in the front, so that there's very little chance of killing, but certainly damaging. But it is one of the better ways to have bullets. I suspect when this company is finally recognized, it'll have a very nice move, and we down paid in the 0.31s, and it's down the 0.20s. This is just a tiny little position. That's a completely different psychological thing, because I might even add to that position at some point. I won't do it just yet, but I might. We'll see. That's a tiny little position. And I said at the time, this is just like a nibble. It's just an experiment. So that's one thing. But when you have a position that goes against you, my rule of thumb is when it gets even close to where you got in, you got to turn around and say, thank you to the trading gods. And there are one of two things that I do. What I tend to do is the moment it gets back, especially if it gets, well, I haven't done it for a long time, but if it gets back to even, I'm out. Even if the stock looks like it's going to double from that moment. And then what I do, it could be 10 minutes later, it doesn't matter. I look at it and I say, okay, you did that to me. It's a horrible psychological thing to be looking at something that has gone against you. It interferes with your thinking. It interferes with, am I right? It bugs you all the time. So what I do is I get rid of it. And the moment I've sold it, my conscience, the little elf, the little thing that's sitting there wagging its finger at me saying, I told you not to do it. I told you not. All of a sudden, that's gone. And you're thinking clearly, I very often go right back in and I buy it. I don't buy as much, but I'll buy it again as a fresh position. And immediately I put in a stop. So now let's go through this carefully. Going to 15 is going to be really tough with the speed that we've just had a move that is almost a double from 6 to the high today of $10 and say 50 cents. Now, my thinking here is that if United States, if the general market starts a big turn down in the next week, I think we're going to go a little longer, but let's just say it turns down. I would not be surprised if U.S. Steel is in the pack. So I don't think you have any choice, right? This is just my opinion. to put a stop in, say, 1/3 of your position and say, you know what? If U.S. Steel goes back to yesterday's price of the high was 935, let's just be very practical about this. You've sat through this whole turmoil. You're starting to look good. I would say that if U.S. Steel goes, X is the symbol, if it goes underneath $9.28 under yesterday's high, I would start to take off a little bit of my position. I'd rather have the cash ready to put back to work than say, oh, it'll be fantastic if it can go back to 15. I don't want to see another, from $10 to $9 even is a 10% correction. So that's my thinking. But most importantly, if for some reason United States Steel, which is acting really well at this particular point in this cycle of the market, it's really important that it's working well. If this stock manages somehow by Friday into Monday or Tuesday without breaking the support, I'm going to say the 9-period moving average of $8.80 in the daily chart, if it manages somehow to squeak to the 10.55, 10.65, somewhere around the area, I would say that that's really good action. And that if you do get a pullback, you've probably turned the corner, at least in the weekly chart, to say there's a chance that U.S. Steel could still go to leg C. I don't know yet about a D, but at least to a leg C. It has failed before at 2 peaks, as it did back in the week of the 6th of November at 1348. Now the plan is this. How are you going to extricate yourself? Because that the price I just spoke about, that $13.48, that's a lot of resistance right there. And it goes back to prior, $13.08 was the high of the week of the 9th of October. So that whole 13 area is going to be tough. So here's my recommendation. And it'll be a fantastic lesson in perseverance, but it'll also be a lesson to say, I have to learn how to control my thinking so that I can be prepared to take full advantage of market declines, as you did by adding to your position here, which is usually not a good position, but in this case, your added position has actually saved you, right?
Right.
At this point, because it's made your average cost less. So so your average, you say, is, what did you say your average would be?
1150.
1150. Okay, so we're real close. You know, you've really done fantastic work in actually staying with it and having the conviction that it's come back. But I really believe, are you able to hold on a little bit?
Sure.
Okay, hold on through the break and I'll tell you what my thinking is, because I think you're going to get yourself out very nicely. So I'll be right back here. I'll be back with Anna from New York, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So we're looking at the steel market vector steel index, the SLX, doing fantastic. It looks like it's breaking out, actually. Okay, I thought about it during the break. I was also actually looking at another stock that I was asked about in the den. So I'm doing 2 things at once. But mostly, I want you to make sure that I was on the same page as you. So that this is my thinking. You'll be able to make money if United States Steel X goes to $11, say, and 50 cents, right?
Right.
Okay. So this is my thinking. If at this particular point at $10.40, being so close, I would not want to see you experience. I would not want you to experience that horrible feeling of seeing something that you've held for so long. You're talking about, it's like 4 or 5 months already, right?
Right.
Okay. So this is what I'm going to suggest. You don't have to, I would normally say exit at $11.35 or whatever cents it is to your average cost. You're out of it, you're done. And then, even if it's 10 minutes later, you say, no, I really like this stock. Now I'm going to go in, but this time I'm putting in a stop. You can avoid that by saying, at this stage, I'm going to have a trading stop on at least 1/3 of my position. And I'm going to actually be a little stricter. I'm going to say if today's low is taken out, 951, I would take off 1/3. You can put it back again in a different frame of mind by saying, oh my goodness, I love it at 880. I think it's going to go back to where it was. Now I'm going to start it as if it's a brand new trade. It actually doesn't work that way because you're still sitting there saying, I need my average cost. But mostly I'm going to say to you, don't sit with it too long. Take something off at least this time. I know last time you would have said to yourself, oh, I should have put a stop in. I never did. Now look at all the hard work I've had to do to get even close to getting back to even. So I'm going to say to you, don't go through that again. I'm insisting you don't go through that again. But I'm also saying that if it gets very close to $11, say, take something off, even if at that point you're losing a little bit. At least say, whew, thank you, trading gods, you got me back to just about even. I won't do this again. At least I hope I won't do this again. I'm back in the running. I've got money to use. I can think clearly. And maybe you just keep 1/3 on and say, you know what, if United Steel goes to that 13 level resistance, what did I say, $13, between 13 and 13.50, you're making money. You're not making as much as if you kept your full position. But think it through differently. That's what I'm saying. The moment it gets close to your price of break even, say, phew, I'm taking something off. I'm going to think clearly. If I want to buy it back, I'm buying it back, and I'm going to put in a stop. Or you say, at this particular moment, I'm raising the stop, and you raise it fairly tight to, if it goes to $11, you say, I'm raising it to $10.50. and I'm not going through that again. That's the most important thing. And I promise you, you'll more than make up the little bit of a loss if you take a loss, if it gets back to close to that level, because your thinking will be clear, and you know you've got the temerity, and you know you've got the capacity to get back to even. Look what you did. You took a loss of 40%, and you've turned it into almost getting back to even. So you have the capacity to do that. So I'm going to say bravo that you did that, but don't go through this again. It's almost all of us in the trading business, we've done something dumb like that. Boy, it just spoils your thinking. Even good trades that you would have put on, you're afraid to, because you're just sitting with this baggage, and this way you want to get rid of the baggage. I hope that helps you a little bit, Anna.
Okay, thanks, Basil. Thank
you very much. Call again, and good to hear from you. Thank you. So we were looking, folks, at X. It was a completely different scenario. I thought that if Anna had got in the 750 to the 8 area, fabulous. Then I'd say raise your stop. It's a different thinking. You're in leg D. Other things can happen in leg D. You've got to be a little bit careful, but it is a very strong leg B in the weekly chart. Still got 2.5 days to go, but so far, fabulous candle. It really is starting to improve the monthly, but the monthly's gone from 46 to $6. There's a big difference. So, okay, we're out of that. Now let's go. Questions I had. First question was, can I play tennis? Nope, that wasn't the question. Next question was, Adam, I did that. That's the TU, the 2-year note. Al said, what did Al say? Let me just see. Al usually has some real good trades at the heart attack bottom or the heart attack top. Whoops, he just said, just short at SPY at 198.47. Tell me, please, you are 200% short anything that has a ticker. No, we're not 200% short. We are short, but not anything with 200% ticker. We are long, 2 and 3 times long, but no, we're not short. It's a brave move. It is leg D as the SPY. No, it's leg E/C in the daily chart. I just don't. There are just too many people, I think, that have missed out. I feel that if I'm correct in my assessment, we should go a little bit higher before we start to get to the area of making big decisions. And the reason why I'm saying that is the move was so quick and so strong. I'm willing to bet that hundreds and hundreds of thousands of fund managers were sitting there about to pull the trigger, either short or maybe nibble a little bit, and it just got away from them. And now they just do not know what to do. That's my thinking right now. So that tells me we've got a little bit more to go. I want to see the 200.11 area in the SPY hit. Not a big deal if you're short here. That's only 2 points. But that's my thinking. I think that we're going to go a little higher. And the flat stochastic says, hey, I would not be shorting at 90% when the stochastic is flat. Maybe quickly, you can have a quick dip, but I would not be. This is not my bias now is to be long. Okay, I wanted to get that out of the way. Let's see. So that's L. So now let's go to Bob and XOM and CVX. Let's have a look at those. So XOM is ExxonMobil trading at 81.63, made a peak E-top at 83.44 on the 22nd. Consolidating. I don't see anything just yet. If I wanted to buy it, I would actually say to you, if you want to treat this as a dividend stock, yeah, I'd have a little nibble here at 81.66, but really it's just a feeler, because a move over 82.68 would say, great, now we're going back to retest that high of 80, can't be 86, of 83.08, I meant to say. Would say, okay, now we can test the 83.44 level. But I can just tell you this, if we do close, if ExxonMobil trading at 81.67 up 39 cents, if it does close under 79.67, that's going to say there's a little bit more of a timeout here. Not a big deal. I wouldn't short it. In fact, it's just a stock I'd be looking to buy right now. I just don't know if I would do anything more than start a little small position here. CVX is the next one. CVX is the same thing, holding nicely. Would I buy it? I'd only start a position, and it would be a position that has a 1.5 point, maybe 2 point stop on the downside. But on the upside, I'd love a break into the 87, 60 area, and then I'd say, yes, now I could add to it. And that's the way I would look at it. And the question then is, so what's the CVX? But wait, let's just do CVS for a moment. Yeah, you see, this is very interesting. CVS is the CVS Health Corps. They keep changing the name. Hey, I want to look at this when we get back. Basil Chapman, Tiger Technicians out. Yep, we've got another segment to go. And as I say, we're long, and I like the fact that we're long right now. Maybe I won't at the end of the day. But things are working in the sectors we've chosen. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. NADEX, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their trading platform. NADEX never charges a fee to use their platform, which even includes real-time charts and full customization capability. NADEX's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. NADEX's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So yesterday I said to subscribers to my opening call that we had a Chapman Wave trim gauge flash, and it says that within 2 days we should have a very sharp futures move that will take the cash indexes up quite sharply from maybe a low, but it'll be about a 9 to 11 point move up. We've already had an 18-point move up, so that worked. But I also had a signal that says tomorrow, regardless of where the indexes, the futures are going into the open tomorrow, there should be an early morning pullback in the Dow. So there we are. That's what we're looking at. Let's go to Brent in Martinez, California. Brent, how are you?
I'm doing just great, Basil. How about you today?
I'm well, thank you.
Very good. I'm happy to hear that. I was just going to comment quickly on the fact that you were talking about some under-the-radar type of stocks, and there's really a ton of them. Pretty impressive, really. You look at the all kind of commodity-based, but Freeport McMoran, and copper. You got oil. You've got some of the fertilizer stocks. There's just a whole host of them that are doing very well. But I was calling today in particular about Vale.
Vale, which is so the symbol is VALE, trading at $3.39. Whoops, $3.40, up 19 cents. You have this, right?
I do. I bought them in at $2.40. It's another iron ore company.
Yes.
Kind of like
I like it. This is a leg E, and the way the E has come about with the stochastic and the MACD suggests to me that, yes, maybe now the upside is just a little bit limited because you're starting to get into the resistance, but it's the support that I'm really interested in. It's at $3.40. I think at 310 to 294, maybe 287 in that area. If the weekly chart has a bit of a pullback, I'm looking at this and saying, you know what? It seems from the technicals that there's a turnaround in the commodities that wasn't noticeable before. This is the first time the weekly charts, and if you don't mind, you'll just take a second to go to TRCCI, the Reuters equal weight. Yeah, that's holding much better. The weekly actually is much better than the daily. The weekly is suggesting that the candle that we're looking at in February, the 5th of February, if this commodity index at 370 is able to climb above 374.50, that's going to be a very nice positive for the very first time in the weekly chart in a long time. I think you're onto something, and I think that Vale, the action that it had yesterday and today is very positive action. Might be getting a little bit extended in the very short term. If I go to the 120-minute chart, A, B, the 120-minute chart says it still has to go to a D. So it's still got some upside. I think you can get to the 347, 353, and then maybe it has to pull back a little bit. I think you're right. Something's going on here. It's very important. I have to congratulate you for getting into these. This is really nice.
It's been a banner year so far. We'll see how much more we can get out of it. But, yeah, DNR is looking good. I mean, they're all acting very well. They seem to continue with the momentum here. We'll see how it lasts.
Right, and not only that, you did get into the potential for multi-year lows, so the percentage is really good when it comes off the bottom, and you're doing that. Hey, very nice. I like that. Congratulations, Brent.
All right, well, it's great talking with you, Basil. You have a wonderful day, and I'll talk to you soon, okay?
Okay, very good. Thanks for calling. So, folks, let's just do this. We've got just a moment to go before you go to your swimming lesson. The VIX index is at 1784. It's up 14 cents. If by the end of the day the VIX pops over to these 18.30 area, this market will take a little longer to consolidate. Remember, I've got a signal that says we should have a little bit of a pullback tomorrow morning in the Dow before we get to rally. So that might say, even if there's some strength at the end of the day, we'll have to have a little bit of weakness tomorrow. And what I'm looking at is that the VIX index is suggesting to me by its action that it should go lower, but it could have a little bit of a pop-up in between. Now, if all of a sudden there's a rally later in the day and the Dow closes very nicely, this VIX will go down to the 17.30s. 1751 was the low. So we're going to watch this real closely. I like the action for this in the stocks right now. I think we're a little bit toppy, and we could take a moment just to take a breather after a fantastic day yesterday. Have a wonderful day, folks. See you tomorrow. Basil Chapman's time.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.